What's up, everybody? Darren Kaplan, what's going on? Hi, Laura, Giovanni. Hey, I think it's your first time, right, Giovanni?
Yeah, it is.
Hey, nice to meet you. James, how are you?
I'm good. Can you hear me?
I can. Can
Perfect.
you guys see me? Darren,
What's
you
up,
see me?
Jeff?
You can see
Yep.
me? I want to show you this view. This is the view sitting from the 42nd floor here at Goldman Sachs. Wanted to show you guys all this. So, figure
What are you doing up there? Talking to big boys?
Figure we got to talk about money. Might as well go to Goldman.
Hey, Jeff, you clean up nice.
Oh, thank you. I know I decided to come to work today. I usually sit at home and start working at 6 a.m. and I get done at like 10:30 every night. I usually sit in my my gym clothes and hit the gym sometime throughout the day. So figured I'd come take the train into the city for this.
Nice. Now, do you
So
live in
before we
New
get
York?
started, I'm sorry, Laura, what'd you say?
Do you live in New York?
So I live in Jersey City. It's about 5 minutes away from Manhattan. So I usually just drive down and take the PATH train into the World Trade Center. Super nice, super cool. It's kind of quiet these days. Not a lot of people are commuting, so you kind of have like the train to yourself.
Nice.
Before we get started, does anyone have any questions that they want to review beforehand? This is going to be a fun, impactful, I think pretty powerful presentation. What's up, Max? See you guys are joining. Hey, Scott. Hey, Braden. If anybody has any questions beforehand, feel free to ask them prior, and then hopefully the presentation covers a lot of good stuff. Anybody? Nobody? All right, so then we'll just get started. So today's presentation is Rising Interest Rates 2022. I geared this specifically towards loan officers. Yes, we're going to talk about rising rates. Yes, we're going to talk about the impact of rising rates on the economy and predictions and projections. However, this is more geared towards loan officers on how to not only survive, but thrive in a rising interest rate market. So if you look at this first slide here, I made this post yesterday. I had somebody message me 3 times on Facebook direct messenger. What rate can you offer on a cash out refinance? And I'm like, can you call me please? Because I wish it was that simple to just, answer this question. Like, where's the property? What type of property? Do you own it in your personal name? What's your credit score? And I'm sitting here like, I'm busy and I want to respect your time. I can give you all my time, but I can't just give you a rate, right? So I made this post to particularly answer like what's needed, right? So in a rising interest rate market, everyone wants to know a rate, but without knowing these at minimum 8 pieces of information, you can't quote a rate, right? And I want everyone to know that if you're a loan officer or if a consumer's watching this, like these things are important. The occupancy of the property, the refinance or purchase transaction type, an accurate credit score, not like, oh yeah, I think my credit score is in the 600s. All right, is it 600 or is it 699? Amount of money in the bank, obviously, reserves are critical for multifamilies, for investment properties. The larger the portfolio, the more liquid reserves you need to have. How about a property address? Let me pull up the property address online and see exactly what we're dealing with. Is it a 2-family? Is it a 4-family? How much are the taxes? When did you buy it? For how much? Who's the legal owner of it? All of these things are critical. And also, like, what's your loan amount? Are you looking for a $100,000 loan? Or are you looking for a $2 million loan? We need to get these pieces of information in order to best get the right answer. Also, the value of the property. I just did a deal last week and, the appraisal of the property. Hey, Felicia, the appraisal of the property came in $100,000 more than what the client had expected. And I got lucky. I was able to flip the deal from a rate and term refinance to a cash out refinance, put $54,000 in my client's pocket, tax-free, still lowered the monthly payment, and now she's able to buy another property, right? So the value of the property, honing in on what it really is worth in today's rising market is critical. Yeah, interest rates are going up, but property values are also going up. So let's look at both sides of the coin. Not just rates are going up, but real estate values are also going up. As we all know, debt to income ratios also factor into what your rate is and what your loan type is. Had a client that wanted to buy a second home in Georgia. I'm like, you don't qualify for a second home loan, but you do qualify for an investment property. You're still putting 20% down. So as long as you're okay with the higher investment rate. If you want to use it as a second home, God bless, but you don't qualify. So let's do it as an investment property, right? Because your debt to income ratio, I don't make it up. Your income is what it is. Let's get that, really pinpointed to what the maximum you qualify for is, what the investment rate is, and if this still makes sense for you. If it does, great, let's do it. So anyone that asks you, what's your rate without supplying these 8 pieces of information, tell them, make a marketing flyer. You need these 8 pieces of information to do your job properly. And you need to put your foot down with this. Otherwise, not only are you going to waste your time, you're going to unfortunately have to backtrack if any of this information comes back false. Now, rule number 1, I don't like school, but I want you all to realize that you need to lead with facts, okay? Now, what are facts? You can't make up the 10-year treasury chart, all right? If you look at this chart right here, it very clearly shows you the 1-year interest rate movement on the 10-year treasury. And I purposely circled in red certain key points that you need to show your clients, you need to even know yourself. So then that way you're able to deliver interest rate information with confidence and with something non-subjective. These charts don't lie, they're public information. So unfortunately, rates are up nearly 0.4%, maybe 0.35% since December 17th, as we spoke about. This chart shows that. If somebody tells you their rate is 3.1% being offered by somebody, you need to ask, when is that quote from? Oh, it's from November. Well, it's February 2nd now. And here's this chart. So like, I don't make the rates up, but like, here's public information. So understand that rates are up. You have to have these conversations, but don't come at them without showing them visual proof of interest rates moving. Rule number 2. I think everyone's going to love this. Do not get run over. The consumer only wants to know your rate. If you only want to answer that question, they're going to go on to the next person that tells them what they want to hear, that gives them a better quote. So I put a funny video here. This is one of the most well-known plays in all of football for everybody. I want everyone
South Carolina,
to
baby.
watch the running back to the left, okay? You don't want to be this guy. All right? Don't get run over. You want to be the person that's the professional, okay? The other thing is you also want to compare apples to apples, right? We all know what an apple is. If I ask you to get me an apple, okay, Jeff, here's your apple. Well, not all apples were created equal, right? These are both apples, but on the left, we have a beautiful 3.5% down FHA loan. On the right, we have a beautiful red 20% down conventional loan. When someone's telling you the rate that they were offered, make sure you're comparing apples to apples. If you go on chase.com and you're getting, 3.5% and 0 points, it says, and the disclaimer on the bottom says minimum 25% down, minimum 760 credit score. But you pulled the client's credit, they're getting a gift for the down payment, the credit score is 705, you're not comparing apples to apples. So if you want the consumer to respect you,
how you doing today?
hey, whoever,
you're breaking up. Can you hear me?
Please.
Great. I'm calling to inform you about a new low-cost final expense insurance plan that's going to cover 100% of your
Guys, whoever, I'm going to have to mute everybody. This is
Let me ask you a few questions.
Thank you, whoever muted yourself. Really appreciate it. But back to what I was saying, you got to compare apples to apples. If you have the facts, you want to get the x-ray of the facts. That way you could diagnose the facts. Tell the consumer that when you're shopping for a rate, and you have the right to shop, I encourage you to shop, you need to make sure you're giving everyone the same information, and the information is time sensitive and usually expires in 24 hours with the volatility in the market right now. People ask, how high can rates go? My opinion, the absolute highest is going to be 5%. Do I think it happens? No, absolutely not. Can it happen for, a week period? Absolutely. Anything can happen, and the feds will immediately step in and bring that rate down. But can they trickle up north to 5%? Yes. Are some investment property cash out refinance rates right around 5% or so? Yes. Are bad credit scores, under 600, upwards of 4.5%? Yes. Is the market still healthy at this? Absolutely. Okay. So when someone asks you, what's the ceiling? How high can rates go? The absolute top is going to be 5%. And I do not think we get there. If we do get there, it will be very, very short-lived. How long can higher rates last? What are higher rates? In my opinion, higher rates are in the 4.5% range, and I believe they last for up to 6 months. So let's say we're already on that upward trend, started going up in January. I think by the time June comes around, we start to trickle down. I believe that the market has already priced in rising interest rates. And that is the reason why rates rose this 0.4% so quickly without the Feds actually raising the rates. Something that's called buy the rumor, sell the news. My opinion is when the Feds actually come out and say they're raising the rates are probably going to stabilize, if not drop a little bit, because right now there's still a lot of unknown. They're front running the announcement. However, any type of political tension, turmoil overseas can immediately drop interest rates because people have what's called flight to safety. They don't want risk in the stock market, so they're going to put their money back into US Treasury bonds to not have any downside exposure, to have their portfolio or investments or monies lose 15, 20, 30% in a week or 2 weeks or a month's time frame. So when caution is in the air, people always go to safety, and bonds have always been proven to be a safe haven to place capital. Rule number 4, how do you combat rising interest rates? Well, remember, you don't control the rates, but you do control the value that you create for both yourself and your clients, okay? How are some ways, or what are some ways you can create value for your clients in rising interest rates? Number 1, boost credit scores. If rates are up, the worst thing to do is a 625 credit score on a multifamily cash out refinance, right? So maybe you take that extra time to help your client get their credit score up, so that way you can get them a better rate, but you need to explain to them exactly what you're doing and why you're doing it. Sometimes if you're doing a refinance, cash out less. Cash out refinances are very, very sensitive to loan to value and credit score, as most of you probably know. You want to make sure when you're pricing the loan out, depending on the actual value and the current loan payoff, run the scenarios. If I do a 65% LTV, what is my rate and cost? 70%, 75%, 80%. Run those scenarios in 5% increments, because interest rates are very, very sensitive to the amount of cash out, especially on the lower credit scores. So if you tell your client, hey, I can get you 70% cash out at 3.75%. If we go to 75%, your rate's going to be 4.25%. Which option do you want? Give your clients options. Don't just think what they might want to do. Show them the full breakdown. If you have a public pricing engine where you can price your loans out, sit down with them, get on a Zoom, share your screen, and literally price the loan out in front of them so they don't think you're charging them points when you know that those are obviously loan level adjustments that are made. Show them the proof. Show them that you're putting in their data that's specific to them, and the market is spitting out the response. You don't have to sell yourself at that point, right? The market's selling itself. Your automatic pricing engine is selling what the rate is based on their credentials. Cash out more. Sometimes, you know what? Hey, rates are up. Client doesn't want to lose their great rate, but if you put an extra 20, 30, 40, 50, $100,000 in their pocket, maybe they don't care that the rate's higher, right? You're giving them more cash out. Ask them what they're going to do with their cash. Are they going to invest in another property? Are they going to pay off student loans? Are they going to, gift their kids money for their wedding? Are they going to, start a retirement account, an IRA? You have to give your client what they're going to do with that money. If you're trying to tell them they need to cash out refinance, they're going to rely on you to be the expert. So you need to be that expert. You could even do cash out refinances and then partner up with a financial advisor, walk them into the financial advisor's office and have them create an investment account. All of these things provide value, and rates don't matter at the end of the day, because you're helping them create their retirement. You're helping them create their wealth, and you're hand holding them into the path that's going to hopefully allow them to be more financially comfortable. Rapid response time. Every single person has the ability to respond to somebody as quickly as possible. You choose when you're available, yes, but you also choose who and when you reply to. You need to have your VIP list. You need to know what urgency is. You need to know who deserves your time 24/7 and who doesn't respect your time, who doesn't have boundaries, and who's not allowed to contact you at all hours of the day and night and on weekends and everything else. You're responsible for that, but also understand you control that. The faster you reply, the more likely you are to have that client for forever. Discuss bigger goals. It's not just about this refinance or this interest rate. Sometimes you have to talk about, hey, we have to do an FHA cash out refinance to pay off all your debt. Your debt to income ratio is high. But once you pay off your car loan in 3 months, Hey, we can get you into a conventional loan. Sometimes it is a two-step process. Hey, how long do you plan keeping the property for? Asking these questions allows you to get intimate with your client, which once they open up to you, they're not going to want to tell other people all their, skeletons in their closets and all their dirty secrets and air out their dirty laundries. Once you get all of the information, people are going to trust you and come back to you for everything. So you need to have the bigger conversation, not just, hey, interest rates are up. Otherwise, you're going to lose a deal and they're going to find someone that's going to lie to them or care more about them and take them from you. Rule number 5, nothing goes straight up. Okay. Interest rates can never go straight up. Nothing can go straight up. You have peaks and valleys. You need to understand based on the charts where the trends of peaks are and where the trends on valleys are. You need to know if we're between 1.72 and 1.85 in the 10-year, and you have a loan that needs to close in 2 weeks, and we're at 1.77 right now, you're in the middle of the range, follow that trend. I'm going to show you the chart in a little bit and show you exactly how to predict these movements. I also share these on my social media almost every single day, but also understand we're in a range. If you need a certain rate to qualify to close a deal because you can't go over 49.9999 DTI, then lock that rate, don't get greedy. If you have a little bit of maneuverability, maybe you float that rate a little bit longer, explain to your client why you're floating that rate, show them the chart, show them your strategy, show them that rate range that we're in, and wait until we trickle back down under that 1.77 number. But you need to control the process and understand that don't panic when things go up rapidly, because usually there is some retreat when that happens. Number one reason why, this is my theory and my theory only, the number one reason why rates cannot go up that much more is because there are, I'm going to say, billions of dollars of commercial debt that is becoming due that was done 3 years ago, 5 years ago, 7 years ago, and 10 years ago, that if rates go up, this commercial mortgage debt cannot be refinanced. So when, whatever office you're sitting in has a $5 million loan on it, and they're at a 3.25% rate commercial, and now rates are at 4%, well, holy crap. The payment's going to go up 10 grand a month, and you have 50 vacancies because of COVID, or you don't qualify for a refinance. Oh boy, now what? Now the bank comes to the person that borrowed the money and says, you owe us $2 million. You have to pay down your loan. Well, the person that borrowed the money is going to say, I'm not giving you $2 million. You need to figure something out here. So we can't have rates go up because too much of the debt in America is tied to commercial real estate. So if rates go up and people can't get out of this commercial debt, loans are going to default, banks' performances are not going to maintain. And then what happens? Then all of a sudden, we're in another financial crisis, probably worse than 2008 from a residential standpoint, because the numbers are just that much bigger, right? So we still don't know the aftermath of COVID, but we also know that commercial real estate in general, office space, a lot of people are now virtual. A lot of people are now not needing 10,000 square foot of office space. So they've downsized and there are vacancies and rents were negotiated down. So if rents were negotiated down, if vacancies are abundant, which they are, I'm sure everyone, regardless of where you live in America, you see for rent signs everywhere on commercial places. Now the fact that this debt is coming due, they're 0 for 3. Rents are down, vacancies are up, and now rates are up. Now, how are you going to refinance that debt? So that's my number one theory behind why rates cannot go up higher. It has nothing to do with anything else, strictly based on the commercial default exposure if interest rates go higher. Now, my opinion is tech companies are probably the largest or soon to be the largest employers in America, right? Google, Amazon, so on and so forth. Netflix, they're a tech company technically. Interest rates going up provides more cost to employ their employees. When they need money, tech companies need to keep borrowing money. They don't actually make money. They need to keep borrowing money to stay afloat. Well, if their short-term costs rise, they then have to pay that debt, can't afford to pay people. That's where layoffs come from. So if tech companies are derived directly based on interest rates rise, then their valuations decrease, then the amount of funding they get decreases, the jobs go away. Now it's a trickle-down effect. So why also can't interest rates rise? Because too many jobs are dependent on tech companies employing people to make sure their bills are paid monthly. So as rates go up, costs go up, people get laid off, people default. So that's why I believe also rates cannot go up much higher than where we're at. Here's the other thing. Yes, rates are up, but also savings are up. Not as much, right? But investments are up. You know, the stock market historically has returned 9% since the history of the stock market, including the Great Depression. So if you borrow money, even at 4% or 4.5% today, you know what? And you're afraid rates are going up, max cash out refinance, put your money in the market because historically it returns 9%. So if you borrow at 4.5%, but your money's growing at 9%, you're 2 to 1, you know? And again, you're not talking about today, tomorrow, talking about a law of averages. So in 10 years from now, yeah, you know what? You got the tax benefit paying 4.5%, but you also grew your investment 9% on average annually. You know, realistically, you probably more than doubled your money in that 10-year span, if not more so. So you need to have these conversations with your clients. You need to know this stuff for yourself because this is all fact. It's all black and white. It's not subjective. It's not investment advice. This is purely based on historical performance of numbers. Borrow at 4.5%, invest at 9%, collect a 4.5% spread. You're way ahead of the game. Real estate is not going to drop due to rising rates, again, strictly due to supply and demand. You know, there are a lot of people taking shots right now. There's a lot of money out there. Everyone wants to buy more real estate, you know, that is already in real estate. People are buying second homes. You know, I don't see in most major markets any drops occurring. Obviously, I believe defaults will rise again due to COVID, due to entrepreneurial endeavors, due to, you know, hardships. Those are just a normal course of life, right? I think 9% of loans default historically, maybe a little bit less than that, but the majority of those are due to life events, divorces, death, you know, accidents, you name it. So maybe we go up to 10%. But at the end of the day, there's about, in most markets, 20 buyers for every one property for sale. So until that ratio closes down under single digits, meaning like 9 buyers to one property for sale, you would have to have double the supply coming, and that's just not happening. People are not selling because their mindset is, what am I going to sell this property for to then go buy something else equally as expensive? I might as well just stay here, right? As we see the baby boomers begin to relocate and retire, which I believe we're about 7 years away from that now. So I say 2029 is when we really see an abundance of supply come to the market, which leads me to believe that we have, you know, 5 to 7 years left of this bull market. So you guys need to capitalize on it now, take advantage of it now while you can, but this isn't going to change overnight. So understand that what we're experiencing now, as competitive as the market is now, regardless of interest rates, this will remain exactly the way it is for years to come. So how do I track rates? How do you track rates? Very simple. Google US 10-year Treasury. Watch the chart daily. First, when you wake up. Hopefully you wake up before 9:30 a.m. If you don't, wake up before 9:30 a.m. So I wake up at like 6 or 7. I look at the 10-year first thing. I look at it at 9:30. That's when the stock market opens. I look at it at 12 noon, right about now. And I look at it at 3:30, right before the market's about to close. That way I know exactly what's going on. It keeps me very in tune with the market. I'm able to predict and project my trends. I'm also able to educate the consumer and monitor all my locks that we have to do. So this is what everybody should do on a daily basis. This should be part of your daily arsenal. And this is what I believe will help separate you from your competition. It will make you become an expert. And this should be something that you get excited about because your income and your career is directly tied to the US 10-year Treasury. So if you're serious about this business and you want to become an expert, this is exactly how you do it. You're not going to see this anywhere else, but I promise you, this will make you feel confident and you'll have a better grasp on knowing what your income is going to look like and what your locks are going to look like for your book of business. Remember one thing, you can't control rates, but you can understand them, right? Control what you can, focus on your service, focus on providing education, give the facts, don't get run over, and make sure you're comparing apples to apples. So that is today's presentation. Now we're going to open this up to questions and answers. Hello, everyone that's first time here. James Milloway, how are you, sir? Welcome. if anybody wants to start off questions and answers, let's get it. Felicia, what do you have? I want you to start us off today.
Good morning. How are you?
Doing well. How are you?
Good. So do you look at the marketwatch.com website? Are you looking at CNBC? Where are you going for those critical times for the
Yeah, I do
10-year?
CNBC.
CNBC, okay.
Yeah, only because I don't like conflicting information, right? So like I always go to the one source, and that's the thing I stick with. So CNBC US 10-year Treasury, I find
Yeah.
that to be the most accurate, and that's just what I always compare it to.
Okay.
I don't like changing things up. I don't want to go from MarketWatch to CNBC. So
Right.
CNBC is just the one I've always done literally for 12 years. So I think that's the
Okay.
best source for everybody.
Perfect. That's what I want to know. Thank you.
Very, very good. Who's next? Maximo, what do you got for us? You spelled your name wrong too, bro. What's going on with that?
I have no idea what's going on with that. Really, my only question on this today is, so you kind of explained it a little bit on the refi side, but as far as the purchase side, with the rising rate environment, do you recommend kind of planning that refi seed within these purchases now?
So yes, and here's one strategy that I've always implemented in my career. And remember, my clients trust me the majority of my clients always trust me to do right by them, right? After we get over that hump. And it doesn't come easily. Your arsenal becomes that more abundant to you the longer you do this, right? So one thing I always tell my clients are, look, rates are up. You're already not going to be happy because rates are up. So what's an extra 0.25% higher in rate now if I could help you offset the money you need to bring for closing costs? So in this type of environment, they're already pissed off that rates are up. So they're like, look, I'm pissed off too, right? I want to get you a 2% rate. Those don't exist anymore. So if rates are at 3.75 right now, maybe we consider taking a 4% rate, but I can give you $3,000 as a lender credit to cover your closing costs. And then when rates come down, because the market's projected by Goldman Sachs, where I'm sitting today, to rise 16% this year, this time next year, I forecast rates to be lower. Your property is going to be higher. We could refinance you out of FHA into conventional and remove the PMI. So I'm setting all my clients up now for that mindset and
And
strategy.
save years.
What'd you say there? Dude, I like the
And
goat.
save
I like
ye-
the goat going on.
Yeah, I got to fit in here in South Carolina now. They won't talk to me with a Yankee hat and a shaved face
Gotcha.
anymore. So, right now with the market shifting, that's the pitch I show all my guys. Right, we're gonna eliminate your MI, save you years off the mortgage. So that I got the rate shift, right? Because they got 3.25 FHA. I'm going to bring them to 3.75 conventional, right? Save them 4 years off their mortgage so they don't even, see the closing costs. And now their good money is being used.
Correct.
That's the positive part of it, right? That's what you want to bring out on those deals.
Yeah, and every deal is different. Like I had a guy that was referred to me last night by a realtor, I don't even know from where, and he was like, look, I have a 2.875 FHA rate. I bought my house literally 13 months ago. I think my house is up in value. I'm like, look, I'm going to be fully honest with you. I don't touch that unless you understand that, net, your interest rate is, I think with PMI, it came out to like 3.72, whatever it was, right? Factoring the PMI monthly. So I'm like, look, your rate is going to be right around there, maybe a little bit higher, but if you understand long-term, the cost benefit and the tax benefit of this, right? In conjunction with how long you plan on keeping this property for, it may be beneficial to do this now, right? But you have to have that conversation. I'm the first person to tell someone this deal doesn't make sense for you, or you have such a good deal at 2.5% on a 30-year FHA rate. Just keep that right now. Let the market keep going up, and then let's maybe explore a home equity line of credit so you don't lose that 30-year rate, right? But every single deal is unique. But Max, back to your question. Yeah, look, it's your job to be the expert and to make sure your message remains constant, and also understand that your message can change anytime based on market conditions and rising or falling interest rates. What you preach today may not be the same as tomorrow based on a new trend, theory, guideline, or concept that comes out. Does that make sense?
Yeah, absolutely. And it actually factors into, in Philly, we get a lot of the down payment assistance and bond rates, which those are set by the state. So, they're making me give them a 4 1/8, 4 1/4 anyway. So if I can do that on my own, still give them a couple grand, it just makes sense in that aspect.
Absolutely. Fully agree. Who's next? Hey, Braden, what's up? I think it's your first time here as well, right?
Yeah, it is. So I've only been in the industry for a year now.
I mean, you look like you're 22. God bless you. I'm jealous.
I am 22.
Are you?
Yep.
See that? I'm actually psychic, so be careful what you think.
Okay. Well, so I'm just wondering, like, I understand the 10-year treasury and all that impacts interest rates, but what's the best way to really fully understand it? I had to sell a rate to a guy who was a lender for years, and luckily he didn't beat me up too bad. But I was really scared because I just didn't understand how the rates are impacted by these things as much as he did. And so I know it's going to take time, but where's a good place to start to understand that?
So that's a very loaded question. I don't know if you did any background on me. I don't know if you know, I don't know even know if you know how you wound up here today, but I appreciate you coming.
Giovanni just invited me at 12:02.
Hey, Giovanni, appreciate that, man. Good looking out. Good looking out. Giovanni, do me a favor also. By the way, everyone that was on the call a couple weeks ago, my books just came in. I'm signing them tomorrow. I'll have them out in the mail tomorrow. So whoever got a free book, do that. Braden, because you're 22 and I freaking love young blood, do me a favor. Just drop, my email is jeff@jeffvannote.com. Email me your address. I'm going to mail you a complimentary book that I wrote. Giovanni, do me a favor, email me your address as well. If I don't think you're on that list, so that way I can send you a thank you for inviting Braden. Here's the problem, Braden. The majority of my business is coaching and training loan officers, right? Both internally for a bank I work for and externally. Part of the reason why I do what I do is because, look, banks don't play by the rules, meaning if business is down, banks juice up your rates that you have to sell as a loan officer to make them more margin. And you as the loan officer don't know that, right? So you get blindsided unless you run your own net profit and loss or branch, okay? So there is no true way as a loan officer, unless you have full access to your investors' secondary market pricing to know what exactly your bank is making versus what you're making collectively as a whole of selling your deal, okay? Now, knowing that and having lived that, I learned that very quickly when I was like, this doesn't make sense here, back in 2010. So I started in December of 2007 at age 20 in the Bronx, New York, right? Running around in the boogie down, not knowing anything, just going out and getting business. And then I ran into another lender. He's like, my rate's, I'm giving an example, 6%. I'm like, my rate's 6.5%. I'm like, how much are you making? He's like, 20 grand a deal. I'm like, I'm only making 5 grand a deal. I'm like, how am I selling a higher rate and making less than this guy? Well, that's why, right? So there's really no way of knowing. What I would tell you is, look, most consumers, where are you located?
Dayton.
Dayton, Ohio?
Yep.
Oh, nice. Awesome. Dayton. Cool. So I don't know what the biggest banks are out there, but usually it's Wells Fargo, Chase, Bank of America, right? Those are the big three.
Yep.
Your consumer probably has a bank account at one of, if not all three of those accounts, realistically, right? So to be ahead of the game every day, again, if this is what you're serious about, first thing you do in the morning before you even check rates, go to Bank of America, Chase, wellsfargo.com, look at all of their rates they're advertising and posting publicly to the consumer, and you'll know what everyone else has an expectation of receiving, right? So Bank of America might be at 4, Wells at 3.875, Chase at 3.75. So you know that if you say anything higher than 3.75, you're probably not going to get the deal immediately. So does that kind of answer your question?
Yeah. So, well, I guess like when you're saying the interest rate might get to 5%.
Yeah.
Is there a standard there? Is that a 680 borrower putting 20% down? What is I just don't understand that piece of it because rates are
when I say interest rates are probably, or could go to 5%, that means that every bank is going to be right around that 5% number. Someone might be at 4.75, someone might be at 5.25, depending on the market, the loan type, the credit score. Again, that's a forecast, right? Rates are still under 4% realistically, right? Again, can it happen? Yes. That chart that Felicia posted in that chat in that memo section right there, cnbc.com quotes, that's more of just a reference, right? And what I mean by that is I like to spot trends, okay? So again, this is kind of off topic, but semi-relative, especially for yourself. So what I would do if I were you is I would take the Dow Jones, right? I would take the US 10-year Treasury, and I would take gold, right? So if you look at gold on marketwatch.com, for example, it shows you how much 1 ounce of gold is, right? and track, okay, if the 10-year treasury is up today, what is the Dow Jones doing? And what is gold doing? And start meeting those similarities and seeing how one impacts the other, because usually those all kind of tell what's going on in the market, right? Now you're going to formulate your own theory. You're going to come up, you seem like a bright kid, you're going to come up, bright young man, you're going to come up with your own theory and track your own predictions, but you need to have something to reference, right? So
Right.
most people look at the stock market, right? Your average person doesn't know anything. The average person doesn't even know a US 10-year treasury note exists. They know what a
Right.
30-year mortgage rate is, right? But the US 10-year treasury, as you begin to track that, you can kind of track the other markets. So if the Dow Jones sells off, let's just say 30%, the stock market gets crushed, right? More likely than not, 10-year treasury is going to come down and interest rates are going to come down because people are going to panic, sell their stock. They want to sell their losses and say, you know what, I can't stomach this anymore. And they're going to put their money into the bonds so they don't lose money. They might not make money, but they don't have the ability to lose 20 or 30%. Does that make sense? So
Right.
that's why you want to watch the stock market, because usually the interest rates, not all the time, but for the past 15 years now that I've been watching this, if the market goes down, usually rates come down with it.
Gotcha.
Makes sense, kind of. Again, I know it's a lot of information. You probably never heard this before. This is my theory, but if you follow me and if you've been following me, the longer you follow me, the more you'll say like, wow, how did he know that? How did he predict that? It's because I follow it and I formulate my own theories. I don't just share other people's theories. I come up with my own theory based on, again, what I've been doing for so long.
Okay. Yeah, I mean, I listened to Barry Habib, his little morning market update. I don't know if you're competing with them or whatever, but that's what I've been doing. But then again, a lot of the stuff he's talking about, I just don't understand yet.
So Barry's a super sharp guy. I mean, he's a legend. I say a legend respectfully, like it's all relative in the mortgage business. He's probably one of, if not the most well-known mortgage people in today's relative market, right?
Right.
And I hear great things about his products, his services. I try not to let too many outside noise factors come in, right? He doesn't see what I see. I don't see what he sees, right?
Okay.
He doesn't necessarily dance in my demographic and market and vice versa, right? What I will tell you is, again, like anything, the market changes rapidly, okay? You can't teach an old dog new tricks, right? Also, with all the unknowns in the world and the variables, there really is no like who's right, who's wrong, because we've never faced this political or economical environment ever before in the history of America, right? So everyone's guess is as good as it is, but it comes down to the law of percentages over the past 5 years, 3 years, 2 years, who's said what and who's been right more often than not. And it comes down to like probability, right? And Barry's very, very spot on with his forecast. I will tell you that. I think rates go lower in the next 12 months. And I think it's going to be due to some political or social incident that happens. It could be layoffs. It could be, a war. It could be something that we can't control. COVID round 76 might come back, right? But,
Right.
The market can survive with higher rates, but it can't thrive on higher rates. And the majority of people have their wealth in the market. So if the market falls off, which again, it's predicted to, that interest rates should come down along with it.
Okay.
But what I also tell you is like, there is a lot of industry jargon focused on like very black and white basic facts. Look at the 10-year, right? Price your rate, however you price your rate at the company you work for, and focus on that. But I would also tell you, be relative and knowledgeable to rates, but sell yourself and sell service and sell what your strength is. Getting the deal done, getting a 550 FHA credit score done, being able to do a VA loan, closing a deal in 10 days. Forget rates. As a 22-year-old, go find more 22-year-olds like yourself, right? That want to invest in real estate. So by the time they're 32, you've helped them get 5 investment properties, you did 10 mortgages for them, you did a reverse mortgage for their grandmother, and you refinanced their parents' house to cash out refinance to invest in that short-term rental property. Follow me?
Yeah,
Focus on strategy.
that
Don't
makes
focus
sense.
on cost.
And I do, but I'm trying to, because I know it takes time to understand the market and have an idea of where rates might go. So I guess that was more, my question was just, how do I start to kind of understand that?
Literally just watch the 10-year treasury.
Okay.
If that thing goes higher, rates are up. If that thing goes lower, rates are down. That's literally the only amount of mental work I would put into that. And just watch it daily, track it with a notebook for your own, again, for your own game plan and well-being, and then start to formulate your own theory. A year from now, I don't want you to come to me and say, hey, Jeff, what do you think is going to happen? You can ask me, right? I'll tell you. I'll probably still be doing this for 10 years from now because I enjoy doing this. But I want you to come up with your own theory based on your own experience and your own seeing of markets.
Gotcha.
That's how you become the expert. And I'm proud of you. 22, man. God bless you.
Thanks.
Who's next? Giovanni, you're up, my friend.
FYI, Jeff, Aiden, he's 19.
Yeah, I know. I found that out last week. I already gave Baker Mayfield kudos last week.
Oh,
Next,
yeah, you're right.
Giovanni, you're up, my friend.
I don't have any question because I mean it was a lot to learn. Me and Braden actually work for the same company, so we're both young,
How old are
hungry.
you? 24?
28.
Oh, I was close. All right, 28.
Oh man, no, I'm actually 29. After 21, it just
I hear you. I hear you. So here's what I want you to do. Tell me about yourself. Tell me about your company. How much business are you doing now? I don't care if it's one deal or 100 deals. Give me a little bit like an elevator pitch of yourself, your company, what your company's great at. Are you a banker, broker? Go ahead.
I've only been here about a year. I've only done, probably 2 loans, but I do work under somebody as well. So
As a loan officer assistant?
yeah, kind of. I mean, I can bring in my own loans, but I do his loans for him too, and trying to learn at the time being of where I'm at. So
What's your average loan size?
for me right now,
You, the guy you work for, that your market.
it's about like 2 billion. So he does a lot, but me, I'm only going to like 150. Kind of depends on what I get.
What I always recommend everyone, in most markets, so I'm fortunate where, my average loan size is about on the residential side, like 470,000 because I'm in New York City, northern New Jersey, I have an $18 million hotel deal I'm doing right now, and I have a $150,000 conventional refinance that's eating the life out of me, right? But what I'll tell you is a loan is a loan. So my advice to every loan officer is like, within 30 minutes, usually depending on where you are in America, within 30 minutes, there's probably a bigger ticket price point.
Yeah.
So whether you do a $150,000 loan or a $250,000 loan, right? It's still the same amount of work. A lot of people stay inside of their market that they know because they're told. They never said, hey, go 30 minutes north, south, east, or west, or an hour and go get bigger loans. Because if you could do 10 loans at 100,000, you could do 10 loans at 200,000. So if you want to immediately earn more money, put yourself in a bigger ticket market. So that way you're able to make more money while doing the same amount of work. Make sense? Give me one question that you have for me. It could be anything. Personal, business.
Personal, how long did it probably take you to learn the business? Like what age did you start out being a LO?
I started in December of 2007 when I got cut from my college football team. And if you go to my Facebook, I literally just posted today,
Okay.
like numbers that I had, and you can see literally it's all I literally posted it. My 2008, I think I closed like, I don't know, not like couple deals. 2009, I made $118,000 in the first 6 months of 2009. And I tell you that because 2008 was a grind. Like, yeah, little bits of excitement, couple deals here, couple deals here. And then next thing you know, I just exploded. Right. So it's all relative to what you put in. I'm a big, what's called front loader, meaning like I want to put all the work in for the next X amount of time and then watch the results pour in. But you need to literally give it 700% earlier. You can't just give it 100% because everyone's giving it 100%. It's close to 100%. Does that make sense? So like, I'm not going to say you might be content where you are, but what I will tell you is you control your income. You control how much knowledge you take on. Like the fact that you're even on this call right now shows me that you want more. Like you're not content with where you're at. You're looking for any type of tip or trick to get you, yourself, your life, your business, your finances to the next level, right? Maybe you need to put a little bit more pressure on yourself and ask yourself, hey, what extra hour per day do I have, morning, afternoon, nighttime, that I could put myself strategically in a position to get one extra deal a month or one extra deal every 2 months, right? If you did 2 deals last year, I want you to do 2 deals this quarter. How are you going to do that, right? Not sitting where you are right now, right? Yeah, you might be making money, you might be getting paid, you might be getting overrides, you might be doing all the loans for someone else. But if that's not your end game, use that as a resource for the time being. But you better figure out your exit plan. And you better make sure your exit plan comes with success. Because you don't want your exit plan to come with, okay, now I'm on my own and now I just fell off a cliff, right? That's only the number one way to be discouraged, not encouraged. So you want to start that transition now and figure out how that looks to get those deals in so you have your path for exit. Right? But everyone's different.
Yo, just
Every
to add to
market's
that,
different.
Jeff, just so you guys all know, Aiden, he works with me. He started at 17 out of high school. He was a caller, an appointment setter for me on my team for my loans. Now he passed his test and we've graduated him to his own loan officer. He does his own deals. We're here for support for him, but he's on his own now. He's not working my pipeline. And that's, Giovanni, I think what Jeff's trying to say to you. You got to figure out how to get out of that to move on.
And look, even if you wanted to stay where you're at, that's 100% fine. Like, you don't have to have big dreams, aspirations. And I'm not the person that's going to tell you what you should be dreaming about or envisioning for yourself. Okay. Everything's relative to how far people want to push themselves and also the quality of life you want to live. Okay. But with that being said, 1 or 2 little tweaks or implementations into what you're already doing, right? Like asking your current clients that you're working with for the guys book a business, asking them for referrals, but then going back to the loan officer you're working for and saying, hey, if I get referred someone because they referred me, I want a bigger piece of the pie. Or maybe you say to the guy that you're working for, hey, I want to team up with you. I want it to be, the James and Felicia team now. I don't want it to just be the James team. Like, I want to be a part of your team. I want to be equal because I'm equally as important to the success that you're doing. Yeah, you're bringing in the deals, but I'm closing your deals. Maybe that's how you find more inspiration and motivation and have more of a united front, right? If you're great at what you do, own it, right? But at some point, you're going to want more. So the question becomes, what more do you want, and then how do you get there? And also, are you deserving of it? I don't know your work ethic. I don't know what you do. But again, the fact that you're on this call, you're taking your lunch break for this, to me, that means something.
And I just jump in and I want to just say that, if you've got a realtor partner that you really jive with and you work well with, don't be afraid to ask that realtor or CPA or whoever it is, who else in your company or who else do you know that's a rock star like you that I would be a good connection for, and ask for that. It's not just asking for referral for a loan business, but also to build your presence and build your network. That's super important. And, there's something to be said about taking 5 minutes at the end of the day and writing out thank you cards for that connection and that other connection that keeps going through. Go back 5, 10 different people. How did I meet Jeff? I met it through Christine Beckwith, through Jenna Bagg. So I sent a thank you to those 2 women for connecting me to Jeff, because it's important. And it just reestablishes why, I'm somebody they know, like, and trust, and that they would continue to connect me with other people in the industry, as well as other opportunities to do business with. So don't forget about those thank you cards. They're super important, and ask for connections, not just, referrals for loans.
Felicia, when you're ready to be the co-host of this Zoom at noon, I need that message from you. I'm ready. I need a co-host.
Anytime, baby.
Thank you for that. And I think, and to piggyback off of what she said, and this is a true story. So I spread all my home insurance business, my title insurance business, my legal business, anything. The only thing I don't spread around is my appraisal business, because I'm 100% loyal to my appraisal management company that I've used exclusively since 2008. And I'll say that to the day I'm dead, right? I gave a title company last year, between my residential, commercial, private money, and non-QM business, over 30 transactions, right? And again, my average loan size at minimum is 450. So that's $12 million plus of business, right? And they're excellent. They're great. And again, I'm not petty, but the guy never said thank you for sending the business at the year end. And they had a Christmas party and never invited me, right? Now, again, I don't care. I wouldn't have gone anyway. but it's the principle of it where it literally would say, hey, thanks for this order. Hey, thanks for a great year. Hey, thank you, right? Now, I might be nobody in the scheme of things to this person, right? But taking 1 minute after somebody sends you a deal or a deal closes or just thinks of you and sends you a referral, send a thank you text message. James, thank you so much for thinking of me. I really appreciate that. Felicia, thank you so much for that nice comment. I really appreciate that. Why? Because you're putting the ball back in their court and you're bringing everything full circle. And it's free. Saying thank you is probably the most grateful, rewarding thing you could do to somebody, especially when they've done something for you or have tried to support you or your career or even gave someone your name and number. Even if they just did it just to do it and it was a dog shit lead, still say thank you because they didn't have to do it. And again, it's a numbers game. So take that time to say thank you. And we're all guilty of it. But like, the person that, stayed till 5:05 on a Friday to, get your CD out so your deal can close on time, send them a thank you, send them freaking flowers, right? Like, hey, Jody, I really appreciate you staying late on this Friday. I know you didn't have to, here's some chocolate. Like, that lady's going to work for you forever, that appraiser that turns around a deal in 5 days opposed to 6 days. Like, thank your appraisal management company. You need to be grateful to the people that just get something done for you, because we live in a world today, especially in this business, where people are lazy. They put you on the back burner. By just saying thank you and showing them appreciation, it doesn't have to be financially, that will get them to work even harder for you and know that you actually care and appreciate them. And that's the best advice I can give you on that. Who's next? Who's got some questions? We got some good stuff going on here. Anybody? I gotta start calling people out. Genevieve, Scott, Jay Hay, Laura Henry. I know you always got good stuff. What do you got for us? Somebody come on board, check in. Hey, Genevieve, how are you?
I'm good. How are you?
Doing well.
I also was invited by Giovanni and work in the same building as Braden and Giovanni.
Giovanni, you're like the #1 recruiter. You got to get some more people. I want next week. I want you to get at least 20.
I was trying to pick you up, bro.
Yeah, I appreciate that. I appreciate that. So how about you? Tell me about yourself.
So I started in the business probably 7-8 years ago. I started from the bottom as paper girl, worked my way up to disclosure, opener, LOA. Now I'm a loan officer. So in the same boat as Braden, just kind of learning how to, read the rates, and we're at obviously at the beginning of our career, so we've got plenty of time to figure it out. But I just wanted to kind of touch on what Braden had brought up, and I think, just maybe just state it in a different way, the question. Obviously, this is all like macroeconomics, and I'm sorry, I'm moving you on the screen, so I'm looking all over.
All good. All good.
But this is all like macroeconomics, and what is doing over here is going to affect what's happening over here. And I think that's kind of like, there's so much information. Where would we start? I don't have time to read, all the newspapers every single day, keep up with everything that's going on. I mean, just for example, like Tesla has 3 locations that factory make their cars, whereas Ford has 61. And like Tesla gets their parts from like all over here and Europe and Asia, and then COVID hits, bam, now they're having trouble getting their parts, right? Because it was really huge over in Asia. And then you see like their stock going up and down, right? So I get the macroeconomics of something like that, but where do we start here with our mortgage rates? And where would we get that info, with all the information that's out there, that's pumped out every single day? Like where would we get that?
Really great stuff. What I will tell you is Tesla in my world, right, is irrelevant. Whether it's here or not here,
right? But that was just an example of like the
fully understood. I was just saying that as an example, right? So like I narrow it down. I like to keep it as simple as possible because many things are very complex, and the more complex things get, usually the more people are deterred from engaging in them, right? My thing is there's so much noise out there, right? There's so many experts out there when the market's been running up and everything's gone up, right? Everyone's a guru, everyone's an expert. You need to be very selective on who you let be impressionable to your life, right? So I'm not going to take the time to go and research someone, right? I'm not going to take the time to go watch videos from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years ago, right? But you have to look at somebody and make sure their message doesn't have holes in it, okay? If you want to be a successful external loan officer, meaning like you go out there, you get your own business, you self-generate all your business, you only need to focus on relationships. Once you lock in the relationship, you can figure out how to get the deal closed. If you're an internal loan officer taking leads, again, I never did that, but you probably need to have a different craft of how you're going to manage and nurture your business. Okay. So you don't need to predict interest rates. You don't need to forecast interest rates. You don't need to know what today's rate is unless you have a loan scenario that's requiring you to know what the rate is, right? I believe that if you get the business and you have the business, everything else falls into place. Okay. So I have people on my radar that I kind of watch what they say or what they do. And then I pick and choose whether I want to believe it and implement it or just pass over it. Right. So depending on what your strategy and focus is for your business will be dependent on how micro you get inside of your business. Right. So like I said, Goldman Sachs predicts residential real estate to be up 16% by November of this year nationally, right? Some markets, it might be 50%. Some markets, depending on where you are in America, you might be down 5%, right? But I'm a big believer in if you want to be a mortgage expert, especially early on, you need to be a hyper-focused local market expert. You want to know every single property that comes on the market in the town that you live in and work in. You want to go meet every single realtor that is in your market. You don't have to get business from them. You need to position yourself to get business from them. So don't worry about things you can't control. You can control getting up every day, being healthy, becoming knowledgeable, responding to people as quickly as possible, right? And when you get the opportunity to deliver, you deliver. And that is how you can grow your business. And then 3 years from now, 5 years from now, if you want to dabble in predicting interest rates for fun and doing all this stuff, God bless you. But at the end of the day, money pays the bills. And the only way you get money is by doing something that you're good at, right? So you need to find the place for yourself, your little niche of your market, figure out how you can capitalize on that and penetrate certain referral sources quicker, sooner rather than later. Just throwing this out there. Let's say there's a corporate center in your building. Let's say you have a big building and there's many businesses in there. Every single person, I don't care if you work with the other two guys that are on this call, go to every single business other than your own, give them your business card, let them know you do mortgages, let them know you can pre-approve them, tell them to come down to your office at any time between these hours, or schedule a meeting on the nights or weekends when they're not working. And you should own that building that you work in. If people are coming there to work, they have income, which means they most likely can qualify for a mortgage, right? Did you ever go to anybody in your building and tell them that you do mortgages and you want to pre-approve them and to get their ass into your office? You see, like that's the low-hanging fruit, Everyone's worried about everything that's so, I want to go. And I had those thoughts too back in like 2010. Like, I want to go take over Manhattan. Like, meanwhile, I got 50 people that are sitting right next to me that need a mortgage that don't know any mortgage people, So get your business card. It's easy. You go to your business and building every single day that you're working. You might as well efficiently, maximize your time. Hey, can I set up a mortgage seminar as a corporate benefit? If you go to any corporation or any company inside of that building and say, hey, I want to put on a quick 30-minute Mortgages 101, how to get pre-approved, how to refinance seminar, I guarantee you, you'll have people lined up at the door, and before you know it, you'll have 10 deals just from people in your building.
Hey, Jeff, I actually have one February 10th, 7 PM. If you guys follow me on social media, see all the links and everything. It's
What are you
called,
doing?
I'm doing a homeowner seminar. It's called Homeowners with a Z. Don't let that American dream of owning a whole home become your worst nightmare. So get it done.
Perfect. Anybody wants to join it, God bless. Go follow my man DK from Total Mortgage. But again, I tell you guys this, that look, we're very complex beings. I'm not a big fan of psychology, but I believe in psychology because it makes sense. And I'm only telling you this based on trial and error and dealing with thousands and thousands and thousands of loan officers banging my head against the wall. Don't overcomplicate things. If you get up every day and go to Dunkin' Donuts, tell the people that work at Dunkin' Donuts, hey, I do mortgages. If you ever need a mortgage, if you ever have any family members that own real estate, here's my card. You'd be surprised. The more people you tell what you do, the more people are going to want to talk to you. They don't know if you have one deal or 700 deals, and they don't care. They just know that you took the time to tell them that you're there for them if and when you need them. So my number one message for today, for everybody on this call, including Max and Darren, who are established and know what the hell they're doing, and I've known them for years now, okay, through social media, get the low-hanging fruit. Stop trying to climb to Mount Everest. Just jump over the pebble that's right in front of you, and be proud of yourself for jumping over the pebble. And before you know it, you'll be jumping over Mount Everest. But start with the pebbles that are right in your lap. You're not going to go from 0 to 100 million, right? But you can, if you wanted to. If I told you that you can't go home tonight without you getting a lead, without paying for it, I 100%, every single person on this call could have a mortgage lead, self-generated, because you know why? You're probably going to want to take your ass home to go to sleep at some point. And you're going to say, Jeff said I can't go home until I get a mortgage lead today. You're going to be telling your receptionist. You might even call your boss and try and get your boss who owns the mortgage company to try and refinance. And you're going to do his mortgage or her mortgage, right? But guys, the business is right in front of you. Just take it. Braden, what do you got? I see that. I see the wheel spinning.
Yeah. So,
by the way, 22, it's 2022 and it's 2/2/22. So I think today's your day.
yeah, could be. Hopefully, I'll wait for that $5 million lead to come in.
No, you want 10 $500,000 leads for 5 million.
Yeah.
And then work their referral.
Yeah, right.
No, so I'm good with going out and I know I can't, but I feel like any realtor I get in front of and have a chance to talk to, I can get a chance with them. I can get them to send me a couple leads. But I have this one realtor who sent me, 3 leads. None of them qualified. I followed up with her. I did everything I was supposed to. The clients liked me. I built rapport. She stopped sending, so those 3 were in 1 week. It's been 2 months now. Haven't gotten anything from her.
Do you know she's doing business?
I do not.
Maybe she doesn't have any more business.
I think she does, though. I think she.
Have you taken her out to lunch?
Yeah.
And what did she say?
She said she wants to have a couple different lenders.
Fair. Be the backup.
Right. And I'm cool with that.
Go find another realtor. You know how many realtors there are in America right now licensed?
Right. I understand that. I guess I'm just saying.
2 million.
Right. So you're saying just whatever?
Did you ever have your heart broken by a girl yet?
Yeah.
Did you ever move on from that?
Yeah.
How many women are there in America that are 22 years old?
A lot.
Next.
All right.
People spend their time focused on who won't rather than who will. And you might have to get in front of 50 realtors to find one to refer you. And if you know that number's 50, then you got to get in front of 500 to get 10 to refer you. See what I'm saying? She doesn't want to date you. Next. Maybe you don't want to date her. Maybe you know what? Maybe she only has dog shit leads. And now you're actually spending money running credit, wasting money and time dealing with deadbeat leads that aren't ready. And then you move on, right? So remember, mentality wise, you need to have, I don't know if you ever play basketball or shot a basketball. If you shoot and you miss, you're not going to be like, oh, I'm going inside now. Or if you play tennis, whatever you do, you play golf, yeah, you're going to mess up. You're going to fuck up, right? You're not going to make every shot. Who cares? Keep shooting. Keep shooting. and get 100 realtors that know you. So 3 of them send you business. And earlier on in your career, you're going to be getting those dog shit leads because she probably knows better. She can't send them to her great lender because she probably knows deep down they're probably dog shit leads. So she's sending them to you because maybe she feels bad for you. Maybe she likes you. Maybe she's testing you. But the earlier on in your business, the more dog shit you're going to get. And then when you turn that dog shit into gold, that's when you're going to be able to own your territory.
Gotcha.
Make sense?
Dog shit to gold, baby.
If no one else has another question, I have another question.
Keep going. I can do this all day.
How long do you think an over-the-phone application should take?
Every single person is different. I think the strategy of which you run your over-the-phone application is more critical than the actual time spent on it. You want to be very familiar with the questions on the loan application, but you don't want to sound like a robot. You want to make it very organic and generic. So like, hey, Braden, that's great. Hey, did you go to college by any chance? Did you go to college?
I did not.
Did you go to any college at all or no?
In high school, I took some classes at Sinclair senior year just so I could get out of school.
Yeah, so basically, so you did high school, okay, fine, and you like a year of college. All right, so now I just know that on the application I put down, when it says years of school, 13. Hey, I know you live in Dayton, Ohio. Oh, that's great. How long have you been living at your house for now? I've been living with my parents here for 22 years. Now you just got how many years the application needs. You follow me? So like you need to humanize the 1003 loan application. So it's not about, hey, I have some people that I'm like, look, here, I know this person sounds like a waste of time. What's your name, address, social, date of birth? Let me pull your credit. I'm not getting any other information before I test this because I have a feeling your credit's not good. Mind if I pull your credit? Okay, perfect. Hey, Brandon, I just pulled your credit. Credit came back 645. You're good to go. Let's get into the employment so I can get you pre-approved. You need to know who you're dealing with. And you also need to know, again, how much time you're willing to invest because you're not getting paid by the second or minute or hour, right? You only get paid if the deal closes. How much is your time worth? So if you think you're $100,000, do this math. Do this math real quick. Take a calculator out. So my goal for you for this year, I'm not undershooting it, is going to be 70. So take $75,000. That's my goal for you.
My goal is 150.
All right. My goal for you is $75,000 in straight earned commission, not unlike leads or anything else. I'm saying like an earned commission, right? So take $75,000 divided by 40 hours. So 75,000 divided by 40 divided by 52. What number is that?
36.
36. So your time, again, remember, I'm not giving you a lofty, I hope you make $100 million this year, right? I'm giving you something that when we talk a year from now, you're like, I made 150. Great. My goal for you is 75. So on this theory, you're worth $36 an hour. Okay. So if you have 5 people that don't qualify and it takes an hour each, you just spent $180 of your time and got $0 for it.
Gotcha.
You know what I'm saying? So you need to figure out what you're worth hourly and how much time you want to invest to be able to make that big ticket at the end.
So when I'm on the phone and the dude's like stuttering around with jobs, he can't remember because he's had 5 jobs in the last 3 years. In that case, you think it might be a good idea, depending on, me and whoever, but to just get straight to the credit pool and then call them back if they have a good credit score?
Hey, Mr. Stutterer, here's what I need you to do. I got to take this call real quick, but here's what I'm going to do. Give me your name, address, social, date of birth. Let me go ahead and pull your credit as soon as I get off this call. In the meantime, I need you to text or email me over your past 2 years of employment with start and end dates, as well as how much money you made, whether it was hourly or salary. As soon as you send me that email verifying your employment, when you come to think of it, I know there's a lot of stuff going on. I'll give you a call back to review your options.
You just wasted no time.
I think that was like under 17 seconds. I just said that.
Did no time getting to the bottom of that. So you got the result in getting the guy's credit report. So you're like going forward with that. And then at the same time, you're requesting, like the backup part. So even if you do approve, now you have the employment to work around,
Gotcha. Because I try to spend, 45 minutes on every
Oh,
application.
no
all the
way,
time.
dude. That's way too much time, dude. That's terrible.
Well, see, I'm trying to build rapport with them to
No,
where
no. It's too much time though. It's too much time on the initial conversation.
So
See,
Brayden, let me not,
Follow,
Darren's
yeah.
100% right. Let me tell you something that I would do, right? And again, I hear where you're coming from, and I'm 100% for what you're saying. I'm 100% understanding, 15 years into what Darren's saying. Let me tell you what I would do if I were you, that I did when I was 22, right? Hey, Joe, you know what? I want to come sit down with you at your table in your house, face to face. Let's spend an hour together. Let's go over everything in person. That's how you build rapport in person. You don't build rapport over the phone. Follow me? So if you
Yeah.
want to
you're
spend
banging
45
it
minutes
all
with
out.
someone, meet them at Starbucks, go to Dunkin' Donuts, go to their house, invite them into your office and spend 45 minutes of FaceTime with them, not like this.
and
Gotcha.
documents while you're at it.
Yeah, and make sure, hey, I'm going to come, we're going to review your documents in person, so make sure you have copies
Bring
made.
it all. Bring everything that you think you need. Just bring it all.
Your first call should be 10 minutes or less.
Okay.
The three
Now, would
elements of
you-
home buying, right? You got your income, you got your credit, and you got your assets. Boom, boom, boom. 3 minutes on each.
Gotcha.
And
It's kind of-
understand something also. Those 3 dog shit dead leads, look at that as experience. What did they say that I could have picked up earlier in the conversation before I wasted 45 minutes to realize these deals were not going anywhere?
Gotcha.
I also think the management that's training you is a huge factor in your success as well. But that's another story. That's a whole
Again,
other
guys,
setup.
just to recap on this. Part of the reason why I do these, I love doing these, is because I know that when I first started, ownership, middle level management, I'm just gonna call a spade a spade. They're non-existent. They're just sitting there collecting a paycheck. Very few people actually care. Most managers are either people that can't originate or just kind of bouncers, security people to keep a buffer between either operations and sales or ownership, management, and sales, right? Squeaky wheel gets the oil, right? That's unfortunately how it is. You're not gonna, if you expect your manager or owner of your bank to invest in you and help you succeed, you have the wrong expectations. Okay. If you want to succeed, you need to invest in yourself, hire a coach, an accountability coach, a trainer, a mentor, pay them more than what they're worth, so they have an overall invested interest in seeing you and watching you succeed. That's how you get ahead. Management doesn't exist. Training doesn't exist. Every single market beats to its own drum, right? At the end of the day, the reason why I do this at 12 noon every Wednesday is to help breed consistency and accountability and give people exactly what they need, what their company does not provide.
Gotcha.
So you're supposed to be able to come here, let your hair down, forget everyone outside of your walls or inside your walls, depending on people are on this call that you work with, right? And you should leave this call fired up, rejuvenated, and figure out, how am I going to kick ass for the next 6.5 days? So by next Wednesday, I could tell everyone what I did, what worked for me, and now I learned something new to then work on the next week. That's why every week the topic changes, because every week you're supposed to be building. And this is what I do with my one-on-one coaching clients and group clients. This is exactly what we do, but it's more hyper-focused based on either market or transaction type. But you need to figure out what your model is, and you're still in that hunting and gathering phase now. Like, you don't know what you're going to kill. You're still hunting, right? You don't know if you're hunting a buffalo or a duck right now. But
Right.
when you realize that ducks don't need a mortgage, but the buffalo do, you're going to go find more buffalo.
Gotcha.
And you're 22 years old. The average loan officer in America is like 54. When I started, when I was 20, the average loan officer, I think, was like 78. I'm kidding, but it was like close to that, right? I didn't get along with them. I didn't think like them. I moved faster than them, and we had nothing in common. So expect to be alone, but come to groups like this and calls like this and follow my social media, watch my podcast, beat to your own drum. And like I said earlier, come up with your own theory, become your own expert. Don't let the people that are older than you, that did things the way in the 80s and 90s and 2000s, 2010s and 2015s tell you or put pressure on you, and you can't compare themselves. You can't compare yourself to them. Focus on what you're doing. Compare what you did today to what you do tomorrow and vice versa. But only use yourself as a measurement but use these calls to make yourself more valuable. Make sense?
Yeah. Yeah.
And respect your time. You got to respect your time because no one else is going to respect your time. Who's next? Sherry Geck. I'm calling you out. Is this your first time here?
Yeah, it is.
Hi, welcome.
Hi.
What do you got? What do you got for me today? I like your background. That's pretty cool.
Thanks. It's my husband's artwork.
Oh, very cool.
I'm super new. I passed my test in November. I started with a company. Unfortunately with New Jersey, I think my license is going to be pending till who knows.
Really? Jersey's pretty quick.
No, I called the department. They said they're still going through August. So I have no idea what's going on there.
If you get a chance, reach out to a guy by the name of Wayne Watkinson, Watkinson. Tell him I referred you and ask if he could help expedite that for you.
Okay.
Wayne's a friend of mine.
Oh, cool.
He also
Thank
runs
you.
the New Jersey Department of Banking and Insurance and might be able to expedite that for you.
That would be amazing. I'm from
Yeah.
Jersey City too. And
Oh, you are?
you know,
Oh,
a
welcome.
couple of my friends. Yeah, like Juan Carlos Garcia.
Name sounds familiar. Your name sounds familiar though. His name sounds familiar. So does yours.
Yeah.
Very cool.
So I'm just trying to figure it all out. I got a couple loans in, but I have like a company that I work for in Rhode Island. So I feel like they don't know Jersey very well. So it's getting hard.
Tough. So what company? Is it a bank or broker? And how did you work for a company in Rhode Island?
Shamrock Home Loans.
Never heard of it. Yeah.
Yeah. Just kind of found them on LinkedIn. They had some interesting things offered and figured I'd try it since I didn't have no idea, obviously.
So let me just tell you my thought is banks don't care, and this is true even for most of the banks that I've worked for and the bank that I do work for. Banks don't really care about people, they care about numbers, right? They have zero interest in providing any type of time, attention, or resources to new people. They don't, right?
Noticing.
Yeah, which you probably find the hard way, and a lot of people put out there, oh, brand new loan officer, starting salary, benefits. Yeah, you have about 30 days to produce, or they're going to fire you or cut you off, or you're going to be 30 days in and be like, I haven't even talked to anybody and I kind of got lost in the sauce, right? The most critical part of a loan officer's career are the first 90 days because, you have no direction, probably have no leadership, no guidance. And if your bank is an out-of-state bank, especially in being in the Jersey City hyper-local focused market with all banks in every corner, Manhattan being in the backyard, it's going to be very, very, very challenging unless you are the current center sphere of influence in your market, in your network, or if your prior career allowed you to properly funnel into this career, right? So I would say really just like kick up your marketing on your social media. If you have a social media following or presence, just start like slowly posting stuff to get people to familiarize you, your name, and now your new career. My other thing is, again, like, don't know Shamrock, never heard of them. They could be the best bank in the world. They probably are. You probably want to be at a more localized lending institution where you can go to a local office and have a local atmosphere where New Jersey guidelines and banking regulations are known, understood, and prioritized, rather than you getting a deal and them costing you your potential deal or doing something wrong and then you looking incompetent to your consumer or referral source.
Right. That's kind of what I'm getting afraid of. I had a couple of deals that I have already in, and it's just kind of feeling like I'm running in circles for no reason.
Terrible feeling. And I hate to tell you this, that feeling is going to be today. It's going to be until the end of your career in mortgages. If you stick it out for the next 60 years, that never goes away, but you want to limit those types of, interactions.
Okay.
You need positive influence, especially you being new. Like, that's what you need. And you probably, they just like Jeff says, they don't want to spend the time. They just, it's very hard. I have a bunch of new guys on my team, but they're my guys that I train. You
don't have any girls? You only have guys?
Not yet. No, you'd be the first. But so we have like an extensive. We don't just like let you be a loan officer. Like you have to learn how to be a loan officer, how to get documents, what a document means when they send it in, what you should be looking for, whether it's 1099 or W-2. Like these are all learning phases as you go on, but you meaning everyone is too worried about the rate. Like when you got to worry about like the deal, like how do you get it done? If somebody comes to you, where do you go and get help for it? Like Is the income moving? Is it not moving? Did the guy just move there? Does he want to buy a house he lives in from a family member? There's just a lot of learning, and the more loans that you guys see, and I keep on saying this, the more consistent you are, just the better you'll get. But unfortunately, we just don't have that like core in our world for a banker to just stop what they're doing and just help you. It's just
so it doesn't exist, and I kind of like alluded to it earlier, is like everyone has to have, this is my opinion only, you have to value your hour of what you're worth, right? So, you know, if you have a mortgage bank owner that makes $1 million a year, you do 1 million divided by 40, divide by 52, or divide by 52, then divide by 40, and that gives you what they're worth. If you're not currently making them that, they're not going to give you probably more than 5 minutes, right? So, you know, my other advice is like, look, Jersey City is a hyper competitive, well-known marketplace, right? Like you didn't just sign up to like go play like intramural kickball. You're playing like with the Yankees in Major League Baseball, right? Not saying you're not competent enough or that you can't succeed. Like you have, you know, you have an uphill battle going, right? So you want to have a team, you want to have resources, right? So by you not having that team or not having those resources, now you're 0 for 3. At least you went out there with a local company that people know, have heard of. At least there's some familiarity there, right? Oppositely, if Shamrock, you're the only person for Shamrock in Jersey City, you have an open territory to own the area, develop your own brand, develop your own recognition. But again, you have an uphill battle where people in Jersey City most likely work in Manhattan. They know Chase, Bank of America, Wells Fargo, and every other big bank, financial institution, or one of the top 50 mortgage banks in the country that probably have some type of Hoboken, Jersey City, Hudson County, Bergen County presence, right? So you're outnumbered on all fronts. And I'm not saying that to discourage you. If you wanted an easier challenge, move to Florida somewhere where people are much more laid back and like, oh yeah, I'm dealing with Sherry. You know, it's just what it is. We're in the most cutthroat competitive marketplace for money in the entire world. And fortunately, unfortunately, you know, if you succeed, you're going to kill it, you know, but getting there is going to take a lot of your time, energy, emotions, and investment to do that.
And that's another reason why you need really good technology behind you.
Well, that's why I'm super excited. I mean, I technically signed up in December and I have like 4 loans I'm kind of already trying to work on. The problem is, again, that company I'm working with, they don't really do jumbo. So they're kind of confused when I brought them one. So, and I'm like, that's what all I'm going to get. That's all I'm going to have. Confused. So I don't know what to you know.
So that's the problem. Like, all these banks want to be, you know, experts and specialists in every state rather than, like I said earlier in the call, if you heard, like hyper focused local. Like I can't be more clear. If you want to succeed, you need to be local. You need to be hyper focused on your local market.
Yep.
And when I say, and you know this, Jersey City, hey, yeah, Jersey City. Okay, how many, you know this, how many inner markets are there in Jersey City? You have the Heights, right?
There's about
you have downtown.
5 or 6.
Wait, you have Bergen Lafayette. Wait, you have Greenville. You know, like Jersey City has its own inner local markets, right?
Yep.
And now you're dealing with a bank that jumbo loans. How do we do those? What are those? What are the county loan limits? Wait, condos, non-mortgable condos? Wait, in Rhode Island, we don't have condos. You know what I mean?
Right.
So
yeah.
Again, not discouraging you, not trying to take it away, trying to like help you out here, like early on before you really become frustrated. If you have 4 loans right now, those 4 loans can turn into 8 loans very quickly. Losing 4 loans can turn into 0 loans very quickly.
Right. And I have a lot of influence in like Jersey City.
To 4 loans, like with the right person that may have told you that they don't work, right?
Right.
So
for those that didn't know, Darren's an only child. So when someone's speaking, he doesn't understand when someone else is speaking to let them finish, but he is an only child.
It's all good. But yeah, I ran restaurants in Jersey City, so I have a lot of great connections. I just don't want to screw them up. That's my biggest thing. That's why I'm getting a little weary.
I mean, again, I'm happy to have that. So I don't do these to recruit. I don't do these for management.
Yeah.
I do these strictly because I love doing these and like I love meeting people. I think if you follow me, you'll know that. I'm more than happy to have a conversation off the record of like what I would recommend. Like even
that would be great.
Put you in touch with people. Again, I work for a bank. We did $31 billion in business last year. I don't even market it. I don't promote it out there. Like if you follow me on social media, you may have seen 1 or 2 posts about it. I don't put that out there because again, like that's not in the front of my market anymore. My main business is commercial, private money, you know, ground up development, bigger, more brain power loans rather than like brain dead loans, if you will. I still have my book of business, so I still provide that service to my clients, right? I still run my own team, but I don't put that out there because again, it is a lot of work. So when I had 7 loan officers working for me, all of which I was paying, all of that really did no business. And I realized I gave all my income and money that I was making for myself away to them to only get nothing in return. I was like, not doing this anymore, right? So that's unfortunately what the mortgage business is. And it's like you're either swimming or you're drowning. There's no like in between, right? You can only tread water for so long. So like for someone like yourself, if you have those connections and sphere of influence and you have that network, more than anything, you need the support staff to bring your deals home. You go get the business, let the team handle the rest to close the business and learn throughout the way, learn throughout the process, get that knowledge, get that experience. And every day you want to become more valuable inside the industry. But the hardest part of the business is getting the business. Closing a deal is easy. Getting the deal, that's an actual deal, is the hardest part.
Okay, thank you.
You're welcome. You're welcome. Who's next? What do we got? Only child syndrome? You got anything else for us today or what?
I could keep going, man. So don't mind me.
Who else did we hear? Did we not hear? Jay, hey, you want to hop on here? Tell everyone who you are, what you do. Hopefully you're not sleeping. I know your camera's off. Giovanni, you have anything else? Anything we could help you with? Any questions? Any pressing issues? Braden, you're welcome to hop back on. You know, again, the goal for these calls are to get your wheels spinning. So yeah, we went over a lot of information. Yes, we kind of get off topic and come back on topic, but at the end of the day, I think the main thing is, you know, that I've taken away from this call is you need to get the low hanging fruit, right? The other thing is, and my mother told me this, I think since I first remember hearing her voice, is like, you never take no for an answer. Don't take no for an answer. Like you need to be persistent. You need to be consistent. You need to be competitive with yourself, right? And you need to be, you know, Braden, I hope you make $150,000 this year. My goal for you is 75,000 of self-originated, self-generated, $0 spent on getting that. Because if you're able to challenge yourself and accomplish that, I'm proud of you. I'm not gonna be proud of you whether you make 100,000 or $1 million. I'm proud of you for doing it the right way and building your business to sustain yourself and your family and your future in any market. Buying leads is transactional. Building relationships is longevity.
Right. We're very purchase driven. The company that all 3 of us work for, we did like, I think it was 83% purchase last year. And I know like overall in the market, I think it's like, I think it might be below 50% purchase business right now.
It changed. So I don't get into all that. That's all bull. I say that's bullshit noise. Don't get hung up on that, but I get where you're going.
Yeah. So, I mean, our sole goal is to go out and get as many realtors as possible. I'm sure everyone's goal is to do that, but I mean,
Can I tell you something real quick? Can I tell you something? Me personally, this is me telling you this. I'm going to use the term little brother. I'm 35. So you could be my little brother. If I was young, got started early, technically be my son, I guess, if I was 13, right? But I'm saying this to you with all due respect. Get to the consumer first.
Right.
Not the realtor.
Get the realtor.
Not the realtor. Get to the consumer first.
And then I have a pre-approved buyer now I can give to a realtor.
Bingo.
Make them money. Now they want to send me business. Is that the strategy?
Bingo. I just led you to the water and you just chose to drink it.
Right.
Follow me?
Yeah. So I think I need to work on different, because I'm constantly, you know, random agent on Facebook messaging them, hey, let me buy you lunch.
Worst thing you could do. Come off desperate.
Yeah.
You're like the drunk guy at the bar trying to get the extra drunk girl more drunk.
Yeah.
Go where everyone else isn't. Go inside corporations. Go inside businesses. Reach out to financial advisors. Reach out to accountants. Reach out to people that have trusted consumers that they are respected and listened to. So when they refer you, they're not shopping you. They're automatically trusting you. Financial advisors, attorneys, accountants. Those are the 3 hit lists I want you to have. I want you to have 10 names of people that do all 3, so 30 people by next Wednesday in your market.
because she's in the situation she's in right now, I would recommend that you go FHA.
Everyone's going after realtors. Let everyone else compete for that. Go after the professionals. No one really listens to their realtor. Some people do, right? But they're more forced into doing it. Everyone listens to their attorney. Everyone listens to their accountant, and the accountant has all the paperwork. And everyone listens to their financial advisor because they control their money.
Sellers to pay for her closing costs.
Gotcha.
Follow me?
Yeah, pretty standard. But she has
Hopefully
her
you
own-
hopefully we'll see you again next week, Wednesday. What'd you think of the call today?
I loved it.
So she is.
I like how you went into some stuff that we might not know to ask as new LOs. And then I also like how you had an open forum kind of discussion where we could all, ask questions. I'm sure we all had a lot of the same questions.
Yeah, and again, this is supposed to be an open platform. Everyone speaks freely. We all have the same issues. We all have the same problems, and hopefully we can all put our head together and come up with the same solution, right? If I experience something today, you might not experience that for 5 years from now, but 5 years from now, you remember us talking about it, and you're going to automatically come up with a solution because you remember hearing about it 5 years ago. We're all in this together, and there's no reason why we shouldn't be a unified front. And again, bring our brains, strategy, and mindset together. You tell me what the heck's going on in Dayton, Ohio. I'll tell you what's going on over here in the Hudson River in New York City. Darren could tell us, what type of goats are out there down in South Carolina where he is, and then we'll all be able to have that much more knowledge and context throughout the country. Sound good? All right, guys, we're going to wrap up. If anyone doesn't have anything else, Genevieve, is that how you say your name? Say your name for me.
It's Genevieve.
Genevieve. Okay. Genevieve. What else do you have? Do you have anything, any questions or anything we could do before we close out today?
Oh no, I thought everything was great.
Well, I appreciate you guys joining. Sherry, we'll talk offline. If you have any questions in the meantime, let me know. Darren, thank you as always. You're kind of like my co-host. Felicia
Thank
left.
you. I
but
appreciate
Felicia's
that. That makes me
great.
happy, Jeff.
Giovanni, thanks for bringing on the recruits. Again, I tell everyone, share the videos, tag Zoom at noon, get everyone on here, get the word out there. Last week we had someone, I can't believe she's kind of a hit and run. I'm gonna have to reach out to her. She got a referral, I think, from Aiden. She's not even on today. So she made a couple bucks and now all of a sudden she forgot all about us. But, appreciate everyone coming on. Baker Mayfield, enjoy your day. Hopefully we'll see you again next week. And, I'll have the topic by probably by Friday. So look out for the link. If anybody needs anything in the meantime, feel free to reach out. If not, truly enjoyed today. And I'll see you guys next Wednesday.
Thanks, Jeff.
Bye, guys.
You got it.
Thank you, Jeff.
You got it.
See ya.